it had solved so many of the problems that we had encountered when we were working on earlier initiatives to bring securities on chain. The first is they removed the career risk of tokenizing on their network. Instead of using the crudest metric, which I think most of them do, which is just Lindy, which chain has been around the longest, they can now say, right, Canton is being used by these other firms. No one ever got fired for choosing IBM. This is the effect that Canton has now built. They have de-risked from a career standpoint, tokenizing on their blockchain. And that is so powerful, and it's a very social thing.
Welcome to The Edge of Show, your gateway to the Web3 revolution. We explore the cutting edge of blockchain, cryptocurrency, NFTs, ordinals, DeFi, gaming, and entertainment, plus how AI is reshaping our digital future. Join us as we bring you visionaries and disruptors pushing boundaries in this digital renaissance. This show is for the dreamers, disruptors, and doers that are pumped about where innovation meets culture. This is where the future begins.
We're expanding across new frontiers, streaming on Zora and Rumble. On Zora, creativity lives on-chain where every post, drop, and idea can evolve into something of real value. Explore what we're building on Zora at zora.co. And on Rumble, you'll find the space where creators connect freely and conversations grow without limits. Catch our episodes and join the discussion on Rumble at rumble.com. Just hit either platform and search The Edge of Show to find us. Two communities, one mission building the future together.
Hello and welcome to The Edge of Show. I'm your host, Josh Krieger, and we feature a variety of top-notch guests and other hosts as well. It's another production of The Edge of Company, a quickly growing media ecosystem powering the pioneers of Web3 tech and culture, and is responsible for other groundbreaking endeavors like the Outer Edge Innovation Festival in LA and Riyadh. Today's sponsor show features Ultan Miller, CEO of Hecto, the infrastructure layer unlocking compliant, transparent access to the world's most valuable private companies. Now with Hecto, he's launching the first tokenized index fund for companies like SpaceX, OpenAI, Stripe, and Anthropic, bringing a new class of private market access to the blockchain. It's great to have you on the show, Ultan.
Thank you for having me, Josh.
So yeah, this is a really exciting and relevant topic. I feel like towards the tail end of 2025, tokenized equity was a big theme, and it feels like you're taking things to the next level. So I'm excited to learn more about what you guys are up to.
Yeah, thanks. It's on everyone's lips these days. We've been doing a lot of the same old in DeFi for quite a while. The same primitives, just on new blockchains. And equity perps and equity tokens kind of represent something new and different. So yeah, it's time to get excited about DeFi again, I think.
Yeah, I guess what's the primary difference between derivatives and perps like this versus what was available a few years back? Like I do remember in the previous cycle being able to sort of trade something that was assembling like something similar to like a stock, for example, but it feels like the mechanisms here are different.
Yeah, I mean, partly. I think there's also the fact that the crypto casino has slowed down. And typically what you see when that happens is people look elsewhere. Also explains part of the rise of prediction markets. Indeed, even sports betting and on-chain casino applications tend to pick up when stuff like meme coins or derivatives trading becomes less profitable. So we're at that point in the market where people are looking for other things to do. And equities have really outshone crypto for the past 12 months at least. We've all, for once, been looking at envy at the stock investors as opposed to vice versa. So I think certainly that's part of it. Is certainly the outperformance of the asset class that's making more people on chain want to trade equities. But more to your point, there have been some fundamental improvements in the way these assets are brought to market. Hyperliquid, finding a very slick way to make perps possible. And then I think really Ondo has led the way, along with a few others, in terms of essentially popularizing a model which is now being referred to as financial exposure tokens, which is really sort of having quite an effect in on-chain markets at the moment.
What actually inspired you to decide to sort of create Hecto, and what were you up to right before then?
Well, I mean, I've been living and breathing private markets for a long time. Prior to setting up Hecto, I run a company called Saxon. Saxon was one of the first FCA-regulated digital asset investment banks. We essentially structure transactions in the private market for crypto businesses, dealing in things like SAFE or SAFT transactions or OTC placements. And I think it was always a dream of mine that private equities would come on chain and be tradable. To that extent, we worked. I don't know if you remember Polymath from back in the day.
Sure, of course.
Yeah. So we worked with the gang over there to help them launch their security token blockchain, Polymesh. This is a substrate-based network that in many ways rhymed with Canton, which is the network that we're building on today, Hecto. But it was really just ahead of its time. Yeah, I think it's good to see, things finally fall into place. Back then, tokens were still relatively gray and, complicated subject, certainly to bring up if you worked at a Wall Street firm. Today, it's the go-to word of choice if you're looking to pump your stock price. So I think the timing is very different for Canton coming to market as opposed to those earlier attempts. But also it's clear to see that the solution and the product that they've been building at Canton is well equipped to Wall Street's needs.
And with regard to your sort of target customer, is it folks that want to keep their assets in sort of crypto in the United States that are more predominantly using your product, or is it an international audience that may not have access to the traditional US stock market as easily?
Well, pre-IPO companies are hard to access for everyone everywhere, right? Whether you're in the US or if you're somewhere else, it's fundamentally a challenge because they are not listed. So, we often ask the question, what does it mean to live in a world where the companies that are shaping the planet and really define your generation are companies that you can't invest in? What does that do for capital markets? What does that do for society? Take, for example, NVIDIA. NVIDIA went public with a valuation of roughly $600 million. And it has created more millionaires than any other company in history, which is a great social good. But SpaceX is still private and it's worth $800 billion. So you can't really say the same about SpaceX, unfortunately. And I think that presents a major challenge for us all. It's a breaking of the social contract. And I would say that the market is desperately trying to wrestle solutions to the surface. We're seeing SPV upon SPV upon SPV being layered into very complicated fee-ridden structures just to try to get more people in, but it's a very broken solution. And so what we aim to do at Hecto is to streamline, structure, and bring liquidity to this pre-IPO asset class by leveraging tokenization.
Makes sense. And you've coined the term Hectocorns, which is $100 billion plus companies like Stripe and Anthropic.
Yes.
And I guess your position is that these giants deserve their own index and asset class. Could you elaborate on that?
Yeah, of course. Once upon a time, we used to talk about unicorns. It was such a foreign concept, this idea that a tech company could still be private when it was worth $1 billion. Surely they need to go public. Then we started to speak about decacorns. Well, fast forward to today, there's 1,500 unicorns worth $5 trillion. So something's fundamentally changed. And we're now shifting into the era of the Hectocorn, the private companies worth $100 billion or more. So they're the ultimate symptom of really this rot in capital markets that's crept up on us. And it's quite possible that they may never go public, right? And we're building a solution for that. So there are, generally speaking, two ways people like to invest, right? Some people like to day trade or speculate, and other people like to passively invest and compound over time. Our audience is the latter. And if you look at the case of BlackRock with their iShares product and the success that they had with enabling people to simply buy the index, we think that that same model can be applied to late stage pre-IPO, so that you can buy the Magnificent Seven of the pre-IPO asset class and hold them in an index weighted fashion.
That makes sense. So sort of unpack for us what's happening behind the scenes that enables this possibility.
Sure. So what we promise is financial exposure. We are not bringing these shares onto the blockchain. Now, in order to do that, to offer financial exposure, we need to buy exposure to the proceeds of the liquidity event. So a very common structure that's used in secondary markets is forward agreements. They are essentially a contract that allows you to pay up front for exposure to the liquidity event. No shares actually change hands. So it streamlines the process of the transaction in that you don't actually need to secure the buy-in of the issuing company to participate in the transaction. Would be challenging if we needed to call up Elon every time we're trying to buy some SpaceX.
Yeah.
And so that's a very clean and slick format that allows us to honor the same promise that other tokenized equity issuers, for example, like Ondo promise, which is essentially just purely financial exposure. Maybe at some point in the future, richer versions of equity with more rights may start to move on chain, but it would certainly seem, at least for the time being, that this is the de facto approach across the sector, and we're leaning into that rather than against it.
Yeah, that makes sense. Is there any risk whatsoever for folks that buy this asset that there's a variation in terms of valuation or liquidity from someone that actually owns the stock itself?
Well, so all of the transactions that we're partaking in are going to be attested using cryptographic signatures. So you'll have on-chain records of everything that backs the index, which I think is important. You know, we expect exchanges and stablecoin issuers to provide us with proof of reserves. We will do the same. And so, yeah, there are complexities and there are nuances around how the secondary market operates, but the nuance and the detail will be transparent.
That makes sense. And is there unlimited scalability if everyone finds out about Hecto and wants to get some exposure to SpaceX or this fund? Is there any sort of capacity constraints?
Well, I don't think so. Even within our own immediate network of investors in Hecto, there's a huge amount of dormant TVL that can be rolled into the protocol. You know, many of our investors are sitting on significant positions in these companies. So we don't need to go out and look for it. There is really quite a, you could say, a healthy number of people that are in these positions today and looking for a way to find some liquidity. So Hecto's not only solving a problem for retail that want exposure, but Hecto's also providing a solution for those guys who have been sitting on SpaceX for however many years, and maybe they don't quite want to wait until the IPO that may never come.
And do you envision sort of this product being used for lower valuation private companies at some point in the future, or is there just such a big demand in sort of need for something like this for the more high visibility private companies that the world wants to tap into?
The Pareto principle governs most things in life, and we think it applies here. So our focus is really on those killers, those brand names, the companies that, you open Twitter or the Financial Times, the companies that dominate the headlines, but that you cannot invest in. Sure, there are other opportunities. We've had numerous requests for a robotics index, which is quite an exciting concept, or a sports team index. Even the idea that we would issue an index made up of all of Elon Musk's private businesses, all the way down to the Boring Company and Neuralink. So you can see that there are many potential products that could be rolled out into the future. But as you see in our name, Hecto, we are very much focused on the Hectocorns first. And even cracking that market alone will be a huge, huge TAM. Not just on-chain, but this is a product that people want to invest in from their retail brokerage account. And there's nothing to say that Hecto should not be the facilitator of that. There's a company that we very much admire called Denari. They use tokenization to enable non-US retail to invest in US stocks, right? So let's say you're in the UK, you have your Hargreaves Lansdowne account, you log in and suddenly, I can buy Microsoft. They have no idea it's a tokenized version of Microsoft. And frankly, why do they need to know? What matters is they can get exposure to a market that previously has evaded them. And so our vision for Hecto is quite similar. We intend not only to roll out access to this product across blockchains, centralized exchanges, but to distribute it in and through TradFi.
That makes a lot of sense. I have a few questions, but I want to just put on your wish list. I'd love like a longevity fund. I feel like
that's a great idea.
I just got stem cells and exosomes, and I feel great. I lost like 20 pounds in a month, and these are companies that are definitely not as accessible. A lot of that stem cell technology doesn't occur in current publicly traded companies, and it's fascinating stuff. So, that would be
news for you actually. So, we are presently working on an allocation in Whoop. It is the first funding round that they have done in 4 years. It's very exciting. The company is valued at around $9.5 to $10 billion, depending on who you ask.
That's small change. They're going to be worth a lot more later on.
I think it's an okay bet. I think it's an okay bet.
Advice, of course.
Yes, caveat. And so what we intend to do with these ad hoc opportunities is to allow people to participate through the Hecto platform. So in addition to the index, which is our core product, we anticipate that governance, token stakers, people who stake our Hecto token, will have the ability to invest in ad hoc opportunities like this, like Whoop. So yeah, we're hoping to secure that allocation, and fingers crossed this one we can offer. Maybe you can participate in the very near future.
So it'll be interesting because I'm a user of Aura as opposed to Whoop.
Oh, no.
I have to decide if I want exposure to the competition.
Well, Aura we're hearing rumors that there might be something on Aura as well. So yeah, we'll keep our eyes out and ears to the ground for that one.
Are you a Whoop or an Aura user at the moment?
Yeah, that's a Whoop. So yeah, no, I swear by it. I love it. It's
cool.
Yeah, it's great. All of us, my girlfriend and her sister, we all have the Whoop going, and it gets very competitive with all the metrics. Yeah, I love it. Love it.
Nice. I just gave a friend of mine my old Aura. I had no real reason to upgrade because the but I just wanted the newest one with the nicer battery life and all that good stuff. It's definitely been part of my journey. So let's dive into some of the more technical aspects of Hecto. You're building on the Canton Network, which isn't a crypto native chain. What made Canton the right fit for you guys, and maybe give folks that don't know anything about Canton a little bit of background there.
Yeah, sure. Canton is bringing Wall Street onto the blockchain. It's that simple. I think it's really one of only 2 companies you can bet on in the top 100, like quality projects that are offering exposure to that trend. Canton and Ondo, right? The reason that we started to build on Canton was it had solved so many of the problems that we had encountered when we were working on earlier initiatives to bring securities on chain. The first, and this is put features of the network to one side. The first is they removed the career risk of tokenizing on their network. And the way they achieved that is, this is a project that's been incubated by DRW Group, one of the largest trading firms in the world, and engineered by the co-founding team of Cumberland, guys who deeply understand finance and finance's needs, that have built relationships up over decades. And they have brought those relationships into Canton and created a circle, a community of really the world's biggest brands in finance. You could look at the cap table of Canton. It's a who's who, everyone from Citadel to Goldman, the list goes on. And what that does for someone who is thinking about where should we tokenize, instead of using the crudest metric, which I think most of them do, which is just Lindy, which chain has been around the longest, they can now say, right, Canton is being used by these other firms. And it goes back to the old adage, no one ever got fired for choosing IBM. This is the effect that Canton has now built. They have de-risked from a career standpoint, tokenizing on their blockchain. And that is so powerful. And it's a very social thing. When we look at the technicals of the network, you can also see how they've achieved that. It is built with compliance, privacy, identity, really at its heart. There have been other networks that have attempted to do this, but they've also built the network in a technology, in a framework that feels familiar. So the language is DAML. It's basically Haskell, which is very popular amongst the target audience of investment banks. And so that technological familiarity is also, something that helps them as well. It does feel alien to people that are more crypto and DeFi native. Certainly the security model is not your conventional proof of work or proof of stake. We actually think that what is happening over at Canton is not something to question, but is really something to be intrigued by. And other blockchains should probably take a leaf out of their book. What they have done is essentially shifted a lot of the cost of security, right? You think how expensive proof of work is for Bitcoin, right? Bitcoin uses 100% of its inflation to pay for security. They've shifted a lot of that into more of a reputation-based system. And what that does is it opens up more block rewards to be apportioned to other key stakeholders in the network, right? So in Canton's case, they're in a position where they pay less for security, and they can now start distributing the emissions to developers and to users for building and utilizing the network. We are talking about current valuations in the region of $1 billion a year, which is quite remarkable. There's never been a bigger honeypot to build somewhere. Just imagine if Bitcoin had used 10% of its inflation over the years to incentivize developer adoption, there would be tons built on Bitcoin, right? We may be using it in the supermarkets if that was the case.
It sounds like, yeah, I mean, it definitely sounds like you thought about this decision carefully. Was there a close runner-up, or was it a no contest?
I think there's really no contest, because what we intend to do is bootstrap liquidity for an entirely new asset class on the blockchain. So were we to try to do this on another blockchain, say Solana or an Avalanche, sure, we could run a points campaign, or we could maybe distribute our token as a form of incentive. We all know how that tends to play out. And so, yeah, the opportunity to work with the Canton Network and essentially redistribute those incentives to our users and our liquidity providers, it's a very, very powerful magnet, and should not be underestimated. Just to give you an example, some of the top applications on the network are generating 8 figures per month in dollar terms of these rewards. So how much pre-IPO liquidity could we incentivize if we're earning a similar quantity of these incentives? Could be a lot.
Yeah, that makes a lot of sense. And you mentioned the governance token before, the Hecto token, HECTO, and how staking could open up some new access to specific private assets. What are some of the other use cases for the token that you are deploying at the moment and that you have in mind in the future?
Well, it is a way to gain exposure to the financial success of Hecto. We will be implementing buybacks on the token. So this is essentially a way for people to share in the success of Hecto. We have a similar model in that sense to other buyback and burn platforms. But yeah, initially, the first version of our product that we're rolling out, which will be available next week, it will have a very distinct utility. Hecto will allow you to wager on the price action of any of these pre-IPO companies in a unique way. It will be like a prediction market. So we simply ask which of these companies will increase in price the most today, and you'll be able to lock your Hecto to the company that you're bullish on. If you're right, you will earn Canton rewards. If you're not, no problem. You still have your Hecto. You can try again the following day. So this is really the first utility of the governance token. But over time, as we discussed, staking it will enable you to get access to very hot pre-IPO allocations and share in the financial success of the network.
Makes a lot of sense. And you are taking a community-led approach to valuation and governance. Can you talk a little bit about that feedback loop and how that's going to work?
Yeah, so we price the assets not through community insight, but rather through utilizing data providers. So there are a number of quite sophisticated companies, including NASDAQ, all the way down to startups, who are aggregating transactions in the secondary market and producing real-time pricing for these companies. Believe it or not, we get price updates as frequently as every 5 seconds for some of these businesses. So that's how sophisticated the secondaries market has become.
Wow.
Yeah, it's quite shocking. So that's how the assets are priced. And the way we think about community governance is community will have the ability to inform some of the decision making around, for example, allocations to those companies that sit within our index, right? That would be one thing. And then the other will be the formation of new index products. If we can see from our stakers that there's a strong interest to launch a Musk index or a robotics index. The token can act as a vehicle for us to take that optimism and then turn it into reality.
So really exciting stuff. You're planning to launch the Hecto token very soon, and it'll expose folks to 7 hectocorns like we talked about. With this particular basket, I think we mentioned a few of them, but maybe you can just kind of go over that a little bit more and talk about the timing there of the launch.
Yeah, of course. So the prediction market product will launch on, don't want to give an exact date, but we imagine next week. And I think it will run for probably a month, maybe a little bit longer, depending. And at that point, we will then roll over our users and extend the opportunity for people to convert their winnings into our pre-IPO index product. That will roll out imminently. We'll be building liquidity on Canton at first. And then, of course, the goal is to take it to the rest of the world. So, yeah, coming to centralized exchanges and wallets and hopefully eventually even retail brokerage accounts near you.
So basically, folks have the choice of using your native platform or sort of accessing the product through, other exchanges that they might be using.
Yeah. You can think of us as existing much like Tether. Most people will access USDT on exchanges or AMMs. There is a free floating price for the asset. It might be a few fractions of a cent above or below $1 at any time. But most people are prepared to tolerate that. And that's fine. The same will exist for our product. There will be a free floating price, potentially a premium or a discount to the NAV. And institutional investors will have the ability to mint with us directly through a KYC'd platform. So in the same way that Tether has its institutional facing window for clients that want to mint or redeem at exactly $1, we will extend the same opportunity for people to get in and access our pre-IPO product at the NAV.
Very exciting. And this moment of launch that's imminent is coming up. But how long has the process been for you of conceiving this idea and taking it to market and figuring it out from all the different angles to get there?
The company is relatively young. So we formed the business in October. We raised just over $1 million before Christmas and have been running at 1 million miles an hour ever since. So it's a very young endeavor, but every single one of the co-founders has been working in one way or another towards this mission for the past decade minimum. It feels like we've been working on it for much longer than perhaps the company registration would have you believe. Yeah,
makes sense. Well, exciting times ahead. And as you sort of look at success for Hecto over the next 12 to 18 months, what does that look like for you in an ideal world?
Well, building AUM for the product. We would like to, get this in the hands of enthusiastic users. My real hope and ambition is that we build more than a product. We build a brand that Hecto evokes the same ideas that the Mag 7 does, right? When you hear Mag 7, you know what people are referring to. Or when you hear FANG, right? There's those companies that come to mind. We would like to establish Hecto in the investor's lexicon as that reference point for these pre-IPO giants. And that I think is a big part of the ambitions for this year, is to really popularize the concept, get people talking about hectocorns and thinking about Hecto as that passive way to play it.
Right on. Well, thank you for all those insights and sharing your journey with us and what you guys are up to. We have one final segment before we wrap up today called our shout out, where you can sort of acknowledge someone in your orbit on the team, perhaps folks that you're working with that maybe don't get as much limelight or attention during this frenetic pace of preparing for the launch. Is there anyone you'd like to shout out? I think you already sort of acknowledged your girlfriend, who's I'm sure behind the scenes providing a lot of support, and anyone else that comes to mind.
Yeah, that's great. I mean, she provided the microphone, very handy. No, she does a lot more than that. It's funny, have some great women in my life. My mother is a very successful businesswoman, and I always have to run my crazy ideas by her first. And this was one of the very few that actually seemed to make a little bit of sense to her. So yeah, she's been a good sounding board. And yeah, I'm grateful for her. Certainly on the team, the guys that we have are exceptional. And yeah, certainly shout out to each one of them. We'll be introducing individual team members publicly over the coming days, so each one will get a shout out. But proud of all of the boys. Yeah, definitely.
Awesome. Where can listeners go to learn more about what you guys have been working on?
So join us on Twitter. Our X account is Hecto Finance. You can follow us there. We share everything. There will also be more coming to the website. If you head over to the website, you can register on there to get early access. If you use the access code Hecto F&F with an ampersand, we'll know to put you to the top of the queue. So yeah, we've had, I think, around 50,000 signups on there already in less than a week. So we're very excited. But yeah, hopefully we can have some of your audience, Josh, join us in the next phase.
Yeah, we'll be sure to share that information with everyone, and I'm gonna register. I'm excited about what you guys are doing, and that's just a personal decision. I think it's really cool and makes a lot of sense to me to give folks access to this. So I'll be following along with your journey, and really appreciate your time on the show today. Thank you for joining us.
Great, thank you. Cheers, Josh. Bye-bye.
Cheers.
We've reached the outer limit at the edge of show for today. Thanks for exploring with us. We have room for more adventurers on our starship, so invite your friends and cool strangers to join our journey. If you're among the hundreds of thousands following us on Spotify, iTunes, iHeartRadio, or watching us on Myco or YouTube, please hit that subscribe button, rate us, and make an awesome comment too. And don't forget to pass this episode along to a friend or two who would benefit from it. Doubling back to again, recommend checking out myco.io, where you can watch The Edge of Show and earn for your time and attention. That's myco.io. Don't forget to visit theedgeofshow.com. The is part of the domain name, where you can learn more about collaborating with us and also subscribe to the Edge of Weekly newsletter for the latest Web3 news, events, and show drops. In addition, connect with us on all major social platforms by searching for The Edge of Show. Join the exciting conversations happening online. Lastly, be sure to tune in next time for more great Web3 and AI content. Until then, keep pushing the boundaries. Thanks again for hanging out with us today. The views and opinions expressed on The Edge of Show reflect solely those views and opinions of the show host and its guests. Please make sure to do your own research. Our show is not financial advice. You understand that you are using any and all information on or through this podcast at your own risk. Whenever making financial decisions, we recommend doing your own research and talking to your accountant for financial advice. From time to time, we may feature sponsored content on the show for which we receive value, and we may share links for which we receive a commission if you make a purchase through one of these links. Refer to our website, www.edgeofnft.com, for our full disclaimer, terms and conditions, and privacy policy.